Welcome to day number 4 of the free TradeLikeVu bootcamp, where we're going to talk about candlesticks. All right. Today we will go deeper into the foundation of price action, not just understanding and reading candles, but understanding what they're actually made of and how to use that knowledge to position yourself in the markets with precision. And as you can see, my camera is working again, so very good news for you. I can provide you with the higher quality that I want you to get. So let's get right into it, all right? Welcome to day number 4. First of all, congratulations. If you've made it here, you've committed to the path, okay? You've chosen knowledge and competency over instant gratification and dopamine. That alone already puts you ahead of 99% of all unprofitable traders stuck in a never-ending doom cycle. So let's talk candlestick anatomy first. Okay, what are candlesticks? We see candlesticks printing on charts every single day, but what is actually a candlestick? A single candlestick always represents exactly one single unit of that time frame that you are currently on. What does that mean? For example, if you're on the daily time frame and you see one candlestick, that means this one candlestick represents the price action of one whole day. All right. Same goes for the 15-minute time frame, for example. If you're on the 15-minute time frame, one single candlestick represents 15 minutes of price action. All right. And a candlestick can only be bullish or bearish, as you can see on the right side. In its most basic form, every candle consists of 3 components, okay? There is a upper wick, there is a body, and there is a lower wick. So let's continue on the right side right here. So on the left side, you can see a bullish candle, okay? A bullish candle always opens lower than it closes, okay? So the opening price is always lower than the closing price. So this is the opening price of, for example, let's take the 15-minute time frame. So this is a 15-minute candle, all right? So as soon as a new 15-minute candle opens, it opens right here. And if it's a bullish candle, it will close up here. And yeah, you will also have a upper wick, which is up here, and a lower wick, which is right here, okay? And contrary to that, you have the bearish candle as well, the bearish candle, where the opening price is always higher than the closing price, okay? So if a new 15-minute bearish candle opens, it opens up here and closes down here. It also can have an upper wick and also can have a lower wick, okay? Why do I say can? Because not every candle needs to have a upper wick and not every single candle needs to have a lower wick, okay? There can also be candles where are only consisting the body, okay, that only consists of the body. And there can also be candles that only consists of wicks as well, where the body is really small. Of course, there will always be a body, but you know, these doji candles I will show you later on. There are also candles that have no body as well, all right? So that's candlestick anatomy. Let's continue with bullish versus bearish candles. So every candle has 4 key price levels, and this is very important because understanding these is the foundation of all price action analysis, okay? Every single candle has always an opening price, okay? This is where price started at the beginning of the candle time period. So for example, 15-minute candle. Every candle has a high, which is the highest point of that candle, okay? Same goes for the low. The lowest point reached within that time frame or within that candle's time period, and there's always a close, okay? Always a closing price where price ended at the close of the candle's time period. And as I explained before, one candle can only be bullish or bearish. It can't be both, okay? That means a bullish candle always opens lower and closes higher. A bearish candle always opens higher and closes lower, okay? These 4 levels right here are also what you want to mark on the daily time frame before trading, okay? This is very crucial. I will show it to you later on. So let's head on to the most important concept there is in ICT and SNC, which is called the power of 3, or short POT, okay? So every candle on every time frame is formed through 3 distinct phases, okay? This is one of ICT's most powerful concepts. So these 3 phases within the power of 3 are accumulation, manipulation, and distribution, okay? In the first phase, accumulation is where price consolidates and builds energy. So smart money is basically quietly positioning their positions, all right? After that comes the manipulation. So price moves against the majority to hunt liquidity, to hunt stop losses, to hunt breakout traders, or to like stop them out. And this is the fake move, and that's why it's called the manipulation, all right? What you need to understand is, this is very, very important, by the way. What you need to understand regarding the manipulation is that smart money always wants to have a better price, right? Why? Because they have very, very high volume transactions that they want to get through. So, for example, they have millions and billions of dollars that they want to buy. For example, the Nasdaq, okay? Let me give you that example. For example, a big hedge fund or a big bank wants to buy the Nasdaq. So what do? They want to buy at the lowest price possible, right? So in order to get the best possible price, so the lowest price basically, is to manipulate price first. So they want to push price lower to trap retail traders and early breakout traders into thinking, oh, the Nasdaq is falling, that's why they sell as well. So all these retail traders fall into this trap, they sell the Nasdaq, they push price lower, and that's when smart money comes in, buys at a lower price with massive volume just to push it further upwards, okay? That is what smart money wants to do with manipulation. And that's exactly the third phase of this power of 3 concept, which is distribution, okay? Price delivers in the true direction, which is upwards, just like in the example that I just explained to you. And smart money wants to ride that move and as long as they can, okay? So remember, price is fractal, okay? This concept, power of 3, plays out on 1-minute candles the same way it plays out on daily candles, all right? And very, very important for you to understand as well is that this concept doesn't necessarily need to play out in one single candle. It can play out in multiple candles. It can play out in 2 candles. It can play out in 10 candles as well. So there's no strict rule like how many candles there are needed for this concept to play out. This is very important for you to understand. And because if it was like this, if it was like playing out on every single candle, everybody would know it. Everybody would trade that strategy, right? And everybody would be profitable. But obviously that's not the case. So that's why it's very important for you to understand that this is only a concept for you to understand, not like a strict guideline you need to follow, all right? So the power of 3 visualized, okay? Let's map the power of 3 onto a real daily candle. This is how every candle forms from the 1 minute to the weekly, all right? So let's continue on the left side first. So here you can see the accumulation, okay? The accumulation phase always looks like ranging or like going up and down, basically back and forth, all right? So basically ranging. What then happens after that accumulation phase is you will see a manipulation sweep, which means, for example, in this bullish example right here, we have massive momentum downwards, okay? Because smart money is trying to get a better price for buying, right? So what they do is they sell massively to trap retail traders and early breakout traders into thinking, oh, the Nasdaq is falling. So it's basically the exact same example that I told you before. The Nasdaq is falling, all the retail traders are following this massive downwards momentum. So they are selling, they are selling, they are selling, they are selling, until a certain price level has been reached where the smart money wants to buy, because they say, okay, now price has reached a level that is very good price for me, so I am going to buy now. So the big hedge funds, the big banks now put their real positions in, because now they are gonna buy with their massive volume, and that massive volume is moving price upwards, what then happens is all the retail traders, which are basically stuck in their sell positions, they have their stop losses right there, right? So what happens is, because of that massive momentum from the big hedge funds and big banks, they lead to all these stop losses from these retail traders getting triggered, and that leads to even more and bigger momentum upwards, okay? That's basically the power of three, like in a nutshell, all right? Very, very simple. So, for example, this is the opening price of a daily candle, okay? This yellow line right here. So the day begins, this is your reference point for the entire session, all right? Then you will just wait for the accumulation, which happened right here, okay? Price consolidates near the open, smart money is loading positions, right? Then you see the manipulation, or you wait out the manipulation, okay? Price sweeps below the open on a bullish day, just like in this example, to hunt stop losses and trap sellers into sell positions, right? And then you simply wait for the distribution, okay? Price reverses massively and delivers higher, closing well above the open. Okay, please take a screenshot of this, study it until it clicks, because this concept is very, very important to understand, all right? Now, let's go ahead with the power of three and the best entry zones. Now that you understand how a candle forms, here's how to use it to find the best entries, okay? So, you simply have a look at the previous daily candle. If it was bullish, you simply buy below the open of that previous bullish candle, okay? If it was bearish, you simply sell above the open, and then you simply write the distribution, okay, as long as you can. That's basically it. Very, very simple. For example, if you entered anywhere below the open on a bullish day, just like right here, for example, you entered right here, okay, you are very, very well placed for the day. And yeah, that's basically the concept. It's very, very easy, okay? Next, very, very important concept you need to understand is what bodies and wicks actually tell, okay? So bodies tell the story, wicks do the damage. This is one of the most important concepts as well for determining whether a certain price level or POI, like a point of interest, is being respected or broken, okay? Let's have a look at the picture on the right, okay? For example, we have a POI or a certain price level right here, okay? This vertical line, this horizontal line right here, okay? As you can see, price comes into this level and starts to reject it as a resistance. As you can see, price goes through this level, yes, right? But it only wicks this level and closes below this level, which means this is a form of rejection, or the price is respecting this level, okay? And what you then see after that happening is price going downwards for a little bit, okay? Because it rejected off this level. It comes again, and again it rejects it because it only wicks this level. It doesn't body close above this level, which means this price is being respected again. This price level is being respected again. And again, price moves downwards for a little bit until it finally comes to this level again. It breaks through, okay? And you can tell if a level gets broken through by a body candle closure. This means momentum. This means, okay, this level is not likely to hold, so price will continue upwards, just like you can see it right here, okay? So don't look at the wicks only to judge a level. Look at where the body closes, okay? That's the real story of this example of this lesson, all right? So another very, very key concept is price is fractal. You've learned it in the past episode, okay? Power of three doesn't just happen on the daily candle, okay? It plays out on every single time frame, from the weekly all the way down to the 1 minute, or to the monthly, or whatever time frame you want to use, okay? Price is fractal. Everything that you see on the 1 minute can also happen on the monthly, can also happen on the 50 minute, okay? The concept is the same at every level. So master it on one time frame and you'll see it everywhere, all right? And as I told you before, the power of three concept, or any concept that you can think of, plays out on every single time frame. So let's have a look at an example for you, okay? You simply go onto the charts, you mark the previous daily open at 6 p.m. Eastern Standard Time. You just draw in a horizontal line. Then you identify your bias, okay? You simply have a look at the previous closed daily candle. Was it bullish or bearish? That's your bias, okay? Then you wait for manipulation below or above the open, okay? If the previous day was bullish, you simply wait for a manipulation below the open of the previous bullish candle. If your bias is bearish, you simply wait for a manipulation above the open of the previous bearish daily candle, okay? And then you enter as soon as you see your entry confirmation and write the distribution as long as you can. And don't worry, we will also cover all these concepts in detail in one of the next episodes, so rest assured, all right? So, what are the key takeaways from day number 4? Here's everything you need to log in from today's lesson, before moving forward, okay? So, lesson number 1 from day 4 is every candle has a wick, a body, and OHLC. What does that mean? Open, high, low, close, all right? Second lesson is a candle can only be bullish or bearish. If it's a bullish candle, it opens low and closes higher. If it's a bearish candle, it opens high and closes lower, okay? Very simple but critical, all right? Then the next thing you've learned today is the power of 3, okay? The 3 phases: accumulation, manipulation, distribution. Every candle on every time frame follows this pattern, okay? Price is not random. And lesson number 4 is the best entries for the power of 3 are below the open on bullish days or above the open on bearish days, okay? Don't chase, always wait for the manipulation to bring price to you before you enter, okay? And lastly, bodies tell the story, wicks do the damage, okay? Judge levels by where the bodies close, not where the wicks reach, all right? So, which session do you actually apply this to, okay? The power of 3 plays out in every single session. The best session for applying power of 3 is the New York session as well, okay? Because the highest volume, the most manipulation, the cleanest power of 3 setups, because the daily opens at 6 p.m. Eastern Standard Time, and this sets up the New York manipulation perfectly, all right? That is why I would recommend the New York session for you the most. And the second best session overall is the London session, okay? Strong setups, especially during the London kill zone, which goes from 2 a.m. to 5 a.m. Eastern Standard Time. And it often sets the high or low of the day before New York distribution. And as I told you before, my personal highest win rate strategy is traded during London. And yeah, you can also trade during London if it fits you, if it fits your personality, if it fits your nervous system or your psychology. But most of the traders, I would recommend to trade during the New York session, all right? As a beginner, pick one session only and master the power of 3 within it, okay? Consistency beats coverage every time. So, what's coming next? In the next episodes, we will be talking deeply about market structure and how price actually moves. After that, we will also cover all the PD arrays in depth. So for fair value gaps, order blocks, breaker blocks, rejection blocks, and whatever there is. Okay, and after that, we will also, of course, cover how to put it all together so you can build your own full trade strategy or trade setups and your own trading strategy, all right? So, the assignment for day number 4 is the same like previous day. Put in the work, okay? I want you to go and pull up any major pair on the daily time frame, okay? It can be Nasdaq, it can be ES, it can be gold, whatever you're trading on, okay? Euro, USD, whatever. Then after that, I want you to label the open, the high, the low, and the close on the 5 recent daily candles, all right? After that, I want you to map out the accumulation, the manipulation, and the distribution on each. You can also drop down to the lower time frames like the 4 hour, the 1 hour, or 50 minute to see the 3 phases clearer, okay? And then after that, I want you to test 3 key levels or 3 POIs, okay? And just watch them closely if the bodies respect or break these levels, all right? That's all. So, day number 4 is complete. And let me tell you, you're building something real, okay? If you made it through day number 4, you now understand the anatomy of every candle that has ever printed and ever will print. You understand the most basic and the most important concept in ICT and SMC, which is the power of 3, okay? You understand how to read levels, and that's not nothing. That's the basic foundation most traders never build. Okay, so go ahead, comment day number 4 down below this video and let me know what was the most valuable piece of this lesson for you, and I'll see you in day number 5.